discuss today. Okay, so as I said, the first thing is the breakout. Now listen to this. This is very important to understand. Some time ago also I was talking about this, but now since the market is rallying again, right? And we once again broke out of 6,000 points. So a lot of there's a lot of what shall I say? A lot of expectations all over, and one is telling that they can't hear me. Is that right? Can you just respond and see? It could be.
Yeah, we can hear you
Thanks a
properly.
lot. Thanks a lot.
We can hear now.
Okay.
Yes.
So maybe.
We can hear you. We can hear you.
Thanks a lot.
Yeah.
Okay. So this is very important, right? In a rising market, how are we going to handle our trading and investments, right? That is what we are going to look at first. Now remember, when the prices are going up, I've been over and over again talking about a thing called breakouts, right? Just now also I said, now this the ASI has broke out of 6,000 points. So in technical language, or when we are interested in following, based on technical analysis, always remember about this breakout, right? There are two ways of the breakout happening. Breakout at the top and breakout at the low, right? When in a rising market, it breaks out and the prices start moving up. In a falling market, it breaks out and prices start coming down. Give me a moment, there's a call. Yamaja. Good evening. Oh, then me patang na tin. Then patang na tin. Aku macam. Hey, zoom. Okay then. මචං මම මේ අර මේ අරන් තියෙන පැකේජ් එක 100 එකක් නේ. දැන් 100ක් ඇවිල්ලා ඉන්නේ. මම රෙකෝඩින් එක වන්නවට. Okay, thank you. So so breakout takes place when the prices are moving up and when the prices are falling, right? Now that the prices are in our market, first of all, it's very interesting for us to understand whether I mean, only time we can make money is when we are buying, right? So the reason why we are buying is because we are expecting the prices to go up. So the breakout in a rising market is what is important for us. And what breakout is like this, right? Here you can see in this chart, when I'm taking my cursor forward, you will see I'm on DIP products. You will see on the 13th of March, the products price had traded between a low of 55.60 and a high of 63.90, right? And then on the 20th of March, it had traded between 56 rupees and 57 rupees. Thereafter, the market got closed, and on the 11th, when we started again, it had traded at 57 rupees. The next day, which is the 12th, it had rallied at a higher price range between 60 and 70, right? So from there onwards, we can see that there had been an uptrend right up to this candle, which is the 18th of May candle with a high of 82 rupees, right? Now, at that point, the high is 82 rupees. That is what is important for us to understand, right? 82 rupees is what is important. Give me a moment. Yeah, no. Yeah. Yeah, much 100 participants only, no? Hi. Just started, Macha. Just started. Yeah. Okay. Okay. So at 82, it stopped on the 18th. So at that point, we have to draw a horizontal line at 82 rupees, like this, right? For it to be visible, let's see. Okay, this is the 82 rupee price. Let's go and make the price precise on coordinates like this. Okay, 82 is what we are watching. That is the high price, right? Now I said for the market to go up, it has to break out above 82 rupees now. Now we can see at 82 rupees, the prices broke out exactly on the 29th, right? On the 29th, it broke out. Then it got retested, right? The prices got retested. You can see prices got retested on the 1st of June. Remember, once the price broke out of 82 rupees on the 29th, where it went up from 82 rupees to 85.90, the next day, which was the 1st of June, it came back to that 82 rupees. That is called a retest. It retested, right? The price retested the previous high. Thereafter, what happened was, little by little, now the present high is then 85.90. So let's draw another horizontal bar at 85.90 like this. Now you can see after retesting on the 1st of June that 82 rupees, the prices went sideways between 82 rupees and 85.90 for a period from let's start from this 82 for a period of 8 market days, a little more than a week, rather, almost more than 1.5 weeks, 8 market days, right? For 2 weeks, we have 10 market days. So 8 market days, 11 days, 11 calendar days, it went sideways, right? It just went sideways. Thereafter, what happened was, thereafter, on the 12th of June, you can see what has happened. It has broken out, or otherwise, a breakout took place above 85.90, above 85.90, and tested a high of 91.80, tested a high of 91.80. So now the high is 91.80, right? So I'm going to use that 91.80 and draw the horizontal bar, right? Then again, it got retested. Now this candle, if you see, that is the 16th of June candle, has a price range of 83.30 and 91 rupees. So earlier the high was 85.90. That day it opened at 86.70, right? That day it opened at 86.70. Then came down to 83.30, but finally went up and closed at 91 rupees, right? Now, let me pause there and I will share another interesting formation at that point. Interesting formation. Now, this is the candle, 16th of June candle. This is an interesting candle. Why is it interesting? Because it closed at the highest price of 91 rupees. It closed at the highest price of 91 rupees, right? And this is known as a Marubozu candle, but this is called a close Marubozu candle, meaning Marubozu means shaven head. Okay, here now in this body, this is the high, the 91 rupee is what is given here at the top, right? So it's basically a shaven head. You don't see a wick like this at the top, but you can see a wick as a tail at the bottom, right? So this is called a close Marubozu candle, right? That is a very bullish signal. It's a bullish signal. So thereafter what happened was, on the same day, it went and retested the previous high of 85.90, but closed a little below 91.80, which is the, you know, the highs that is the high that is at play, right? Which is known as the present high, right? Present high is 91.80. It closed at 91. Then what happened? On the next day, it closed at 92. So rather, it opened at 92. It opened at 92, but failed to close above that. Opened at 92, failed to close. It closed below, right? Now here in this, you can see both sides, the top and the bottom, you don't have a wick or a tail or a another wick at the top. You don't have that. This is known as a Marubozu full candle, right? Marubozu full candle, but this is not, the price range is also just, you know, almost 2 rupees, 89.90 to 92 rupees, right? But the interesting part is it got, I mean, the price went and tested the 91.80. The next day, you know, from there onwards, this is called a sideway movement. You can call it a correction. Sorry, more than a correction, a consolidation, right? It's a consolidation taking place. Okay. And on the 24th, another breakout took place, right? Breakout of 91.80 and moved to close at 94 rupees. Moved to close at 94 rupees, right? Now, in this situation, we have to also understand when the prices are moving sideways, right? How the volumes are behaving. How the volumes are behaving. You can see when the price went and tested 91.80 on the 12th of June, right? The volume was 41,920, whereas the average was 10,720, right? It was like 4 times higher than the average price, average volume. Then when the prices are moving sideways, most of the time, right, you don't see a lot of quantities or a lot of volume trading, right? But in this, there is a secret. In a sideway movement or in a consolidation, you will see increased quantities in the normal market. In the normal market, not in the crossings, right? Crossings is also important. Along with the crossing, if you see the volumes of the normal market is also increasing, that's a very, very bullish development. Very bullish development. So in this scenario, you can see that's between the 12th of June to the next breakout till the 24th of June. We can see on the 22nd, there had been a higher volume trading, right? There now what is happening is that the highest volume during that period was 70,800 on the 22nd, in a price range between 89.70 and 92 rupees. right? So what it means is that the volumes are increasing within the sideway movement. Then on the 24th, the breakout took place. From that breakout, right, you can see how the volumes are increasing over here with the prices also continuously increasing with higher low and with higher low and higher high formations. All these lows are higher than the previous lows. All these highs are higher than the previous highs, right? All these, and at the same time, you can see all these, I mean, at least these two are Marubosu candles. This is once again a closed Marubosu candle, right? And at the same time, you have more or less a gap over here, right? More or less a gap over there. Okay. Now, with that, we can see that thereafter there was a large price ranging candle, also without the top and the bottom wicks, which is also called a Marubosu, which is a very bullish candle. It is a very bullish candle and hitting a high of 111 rupees and 50 cents. So that's the high after the breakout from 91. Here the 91.80, the breakout took place. Thereafter it went and finished that rally at 111.50. That's at 111.50. So again, there had been a sideway movement. During this sideway movement, you can see the volumes are also increasing, right? Volumes are increasing despite that sideway movement. That gave the impression that the what you call that sideway movement is not going to stay for long. It's not going to stay for long, right? Then again, with a Marubosu candle, a strong with a bullish, strong bullish formation or a movement, right? It broke out of that 1130, that is 1150, 111.50, and thereafter it went and did a high of 119 rupees. Okay, 119 rupees. After that, you can see there was, with a slight gap formations, you can see both these candles extended that rally. The 8th of July candle and the 9th of July candle extended the rally with a high of 124.70 on the 9th of July, 124.70, right? 124.70 on the 9th of July. That's the price. That's the horizontal line. Now let's move forward. You can see while going forward, right? There is a sideway movement happening over here. The previous high is this, which is 111.50. After hitting a high of 124.70, what happened? It came below that price area of 111.50, right? And price just went sideways between a high of 117 rupees and the low of over here is 103.50. So basically, from this high of 117 rupees to a low of 103.50, the prices started range bounding or going sideways, right? You can see that happening here. Okay, but look at the volumes over here. These are very thin volumes compared to the volumes that we saw here. Okay, there was a consolidation happening. Thereafter, we can see another large candle formation just hammered the prices from a low of 114.30, right, to a high of 127.90, right, to a high of 127.90. Right, here it is 127. That's on the 20th with very large volumes, above average volumes. You can see that happening. Then let's go forward, right? Then 2 days, it range bounded, giving a bearish signal, right? Again, but at the top of this candle. But you can see the highs of these two candles, meaning the 21st of July and the 22nd of July highs were higher than the high of the 20th of July. High of 20th of July is 127.90, but the high of 21st of July is 129. Similarly, on the 22nd of July also, it was 129. Then what happened? You can see with large volumes of 290,000, basically you can see, I mean, when we were here, right? When we were here, look at this, you know, these bars. These are like tall towers, right? All these bars are tall towers. Okay, from here, let's take another, draw another horizontal line because this is the largest, the tallest bar of volumes. So let's take that, right? Then when we are moving forward, you can see no, that won't work. We'll take that out and let's see, right? You can take we'll do a vertical line just for our study purposes. Let's take a vertical line like this, right? And then move forward. Now see, that tall candle became very, very small at this point, right? After breaking out, now the prices have broken out very effectively, right? From here, now this is the next breakout point, which is at 129 rupees, right? Then with a very large volume, we can see that the price is going and testing the resistance level of 139.90. Okay, 139.90. Let's move forward and see what is happening to that 139.90. So we are going to draw another horizontal line at 139.90, like that. Okay. Thereafter, let's move candle by candle. Again, you can see this was a taller candle, but this became much taller. This is now the tallest candle, right? Let's take it over there. And now what is the quantity? 388,000 shares, right? Now that is at 138. Remember, the present high is 139.90. Now there's a breakout above 139.90 after 2 days from that large volume. Then it broke out, and this is the present high now. This is the present high. So we'll take that, which is at 144. Let's move further. Right? You can see that the prices are testing that high. It's not going up, but testing with a sideway movement. Now this day, that is the 12th of August, the prices went above 144 and closed bearishly with a bearish candle, but still it was above the previous high of 144. Okay, so there is a breakout there. Now after that breakout, we can see with an equally high tall volume bar, right? It went up to this level, which is 168.70. Then the next day, tried to move above the 168.70, right? The opening, it started at 172 rupees, hit a high of 179 rupees, but the day failed to close above this candle of this top of 168.70 in this candle, right? Close below that, right? It went and tested high, but closed below. That is a bearish close. Okay, so we'll take now the present high is this 179 rupees. Present high is that. Okay, present high is that level. Now let's go. So basically the same patterns, you know, the sideways movements are taking place, hitting, breaking out of the top, and now we are, you know, back again going on a consolidation, a sideways movement, right? You can see that the prices from here, it came down to test the low of this candle of 151 rupees. Now that is the 13th August candle. Look at this candle, 19th August. It's at 150 rupees and 10 cents. Here it's 151. Try to come below that. Now from here continuously it was coming down, right? This day also, when it opened at 155.20, which is below this, in the ticker you would have seen not a green candle. In the ticker you would have seen red. So people, you know, by looking at the what do you call the ticker, you get highly emotional, no? Right? Many there are clients, there are, you know, participants. They get really excited when you see the colors or in the what do you call in the ticker, right? That is why we want to encourage all of us, even me, honestly, right? Before studying all these things, getting used to this, you know, we get emotional when we see the ticker, right? But once you get hold of the entire idea of technical analysis, right, it is a different picture. Now, why it is important for us to you know, educate ourselves, right, and increase our awareness, increase our knowledge in technical analysis is simply because of this, right? Here, I am not using any of indicators. You have MACDs, you have RSIs, you have, you know, the moving averages, you have the Fibonacci's, you have, you know, some, what do you call, the Ichimoku indicators, you know, there are so many indicators. I'm not using any such indicator. I'm only looking at the price action. This is called price action analysis, right? I'm using the prices and the volumes. Why is that? Right? In the market, all of us, we buy from one share to millions of shares, right? Paying real money. We are paying real money. And there are thousands of reasons for us to pay that money and buy shares. In the case of DIP products, all these, you know, little candles comprised of real money, real values, right? This is basically every day we are valuing, you know, we are basically contributing to value that company called DIP products. Even if you buy one share, at a price, right? That one share, that price is multiplied, or the entire issued capital of Diproducts is multiplied by that one share. Okay. Now there are instances where only 100 shares are traded, maybe 2-3 shares are traded, right? But that value is a legitimate value which is accepted world over to value that company, which is called the market capitalization. So each and every candle you have these values, and those are very important values. And we are talking of Diproducts, which is a ₹1 billion worth company. I mean, it's worth more than billions of rupees. Now that is what is happening in this, price behavior, right? So it's very important to understand how the prices are behaving along with volumes, right? When you're talking of this 388,000 shares between a price range of 134 rupees to 138 rupees, it's a huge amount, right? So this is serious business. All the other indicators, right? The Ichimoku indicator, or moving averages, or the MACD, or the RSI, stochastics, Keltner, anything, are all derived by the prices. They are all derived by the prices. Thanks to the prices only, those mathematicians or scientists came out with those formulas. If the prices were not there, they can't even think of creating a formula. The problem is the formula is becoming strong, popular, but not the price. The price behavior is the important thing, right? The price behavior is the important thing, right? So now we are here, 179. Amalka, something's wrong. Please be careful. So now this is the present high, 179 rupees. Okay, 179 rupees. Now we are moving within a sideway movement. As I said, this is called a false breakout, meaning it tried to come down below this low. It didn't happen, meaning buyers were more stronger. Buyers were more stronger. At the same time, you can see in this candle, even the volume is a bit higher than the previous 3 candles, at least the 2 candles, right? So there is some formation, some play taking place, right? So after that, we can see the prices moving up with higher lows and higher highs, moving up. Then again, there is a sideway movement. Still, the prices are moving sideways between a low of 151 rupees and a high of 179 rupees, right? You can see that happening. That itself is a huge difference, right? 151 to 179. Okay, so there is a big play going around in this sideway movement, right? Now we are trying to break out of that 179. It broke out and closed above, right? It broke out and closed above. You can see that. Then again retested. The next day, it retested that 179. Again retested. Thereafter, what happened? Again went up. Now we have another high. That's at 189.90. Right? That's at 189.90. Now we are moving again. Then we can see the prices moving above 189.90 and at 193. Now 198, that's the closing price. Then 203.90, the closing price, right? So 203.90 looks like, let's see whether that's the high formation. Okay, the prices again got rejected where the high here is 205 rupees. The next day, that is 17th of September, it went up to test 210. Here it's 205. Actually, it had opened, sorry, on the 16th of September, the high had been 205 with a close at 203.90. The next day, the 17th, it had opened at 205 rupees, went to a high of 210 rupees, but closed at 202.90, which is a bearish close compared to the previous day. Bearish because compared to the previous day. Then again, the price is moving sideways. So we are going to take this 210 as the present high, right? Again, going sideways, then broke out and closed above. Closed at 214 with a high of 219. High is 219, close is 214. Both are higher than 210. Now it retested, but open at a higher price, forming a small hammer formation with a hammer candle pattern. Now moving sideways, but the high is higher than this 22nd high. 22nd high, 209 rupees. 19, sorry. Here the high is 220 rupees. In this doji candle, it's 222 rupees. Okay, now it's at 222 rupees over here. Okay, now price is failing, but then the next day it broke out and closed above the 222 rupees with a almost a close Marubozu candle. Close Marubozu candle of 225.10. The close and the high had been 225.10, right? Then we are moving further. The next day, the candle had been within the range of this candle. The range of this candle is 217 to 225.10. The range over here is 217 to 225. So let's move forward. Okay. Now this candle, right? This candle is called an inside bar. This is the mother candle, and this is the inside candle, right? It traded within the range of this candle. It's called an inside bar formation. Now we are moving, going sideways, still, within the same high of 225.10, 225, next day 225, next day also 225, right? So basically you have 4 times trying to move above 200 and break out above 225, but it didn't happen. Let's see the next day. Next day there was a bearish close, right? It came and came back again to the high of to watch a zone, a price area between the high of 189.90 to the high of 210 rupees. 189.90 to 210 rupee zone or area. To that price range, the prices came and closed, right? That's on the 2nd of October. Next day, still trading within that range. Now remember, that's the reason as to why we are saying the previous supports and resistance areas are very important. The previous support and resistance areas are really important. you can see that after the breakout of this 189.90, it went up to test 210, right? So when the prices fell from that high of 225, came into that area between 189.90 and 210. So now there is a bullish close, but still below the present high of 225. Still trading within that range, and then move to try and close, or it tested 222 rupees here, right? Why I'm taking time to tell you all about this is because, you know, you can take candle by candle and write a story. That's the beauty of technical analysis. You can just keep on, you know, talking to yourself a story, right? Understanding how the breakouts are taking place, understanding how the prices are going up or coming down, right? So now we have moved back to the range between 222 rupees and 210 rupees. We are still retesting that 222 rupees. Then with a bang, it went up. It went up to 245 rupees. Remember, it was trying to break out above 225 rupees. Didn't happen, but here, right, it just went up with not only just the price, with solid massive volumes. 386,000 for the products is a massive volume, right? A lot of people don't like to trade this because, you know, it is considered as an illiquid counter. But people who are taking that, who are confident in the company, had paid millions and millions of rupees and bought by paying a premium, right? This is a premium that people have paid over this. Here, the top is 225, 225.10, but they have paid a premium up to 245 rupees. Thereafter, what happened? With continuous or continued volumes, right? The next day also, it had gone up. Again, continuous volume behavior. Imagine here, it's 466,000 shares. Here it's 364,000 shares, right? And let's go forward. Now we have gone up to a high over here, a high of 290, right? After the breakout of 225, right? It has gone up to 290. Next day, the volume is 461 rupees, 461,000 shares, right? Here, what is the price? Gone up beyond 300 rupees and right up to 329 rupees. Right up to 329 rupees. Now this is the next day, we can see that this is called a drag. This is a doji candle, which is a gravestone doji candle formation. It is called a gravestone, which is a bearish candle, right? And this is the high of 329 rupees. This high, it had tried to test here 345 rupees, failed, and failed to close below the previous day's high, but 10 cents above the previous day's close, right? The next day, again a doji formation. Next day also not a bullish formation. Next day another bearish candle, a bigger bearish candle. Remember, again, the same thing is unfolding here, right? This is the highest it has gone up to. This candle, that is 347 rupees. Now, this candle had come back to the the price range of the 14th of October candle, price range of 14th of October candle, right? That is between 293 and 329 rupees, right? Then we are still there. Again, a false breakout formation because it tried to come below the low of this, didn't happen. Let's see whether it will happen. Right, again came down, but closed much higher. Now here, it's a bearish candle, but still it's above this candle, or basically at the higher end of this candle. You can see that it is at the higher end of this candle, even though it's a bearish candle. Still, we are within this price range and the price range of this candle. What does that mean? It's going sideways, but for some reason or the other, okay, it's the buyers are supporting it above the price or above the close of this, which is 293 rupees. In other words, the prices, the buyers are wanting to collect or accumulate quantities, volumes above 300 rupees. Basically, this is the 300, tried to fall below 300 rupees, never happened. So it's called a false breakout. It's a false breakout. That the breakout was false as far as the 300 rupee support is concerned. Okay. Still above 300. Now we are moving back again. 325 is the close, 24, 333. Right now you can see volumes, how the volumes are accumulating, but you can see that the price ranges are very narrow compared to these bullish price ranges. Then with a gap formation and huge volumes of 1.5 million shares, right, it broke out of 345 rupees or 347 rupees and moved up to close at 393 rupees and a high of 399 rupees. That is on the 5th of November. 5th of November. Right? Then the next day, it went up to a high of 425 rupees. Okay. And closed at 395 rupees, which is 2 rupees above the close of the 5th. 6th is yesterday. This is day before yesterday. Now this is where we are. Right? This is where we are. So if the price, if the trend, this present trend extension is going to take place, then what should happen? Then the high of this candle, which is 425, has to be broken out. It has to be broken out. Right? Now the trick in this is this. Okay, we have to see how it is going to happen. Way forward. From Monday onwards, we will know whether this 425 rupees is broken out and going above to reach new highs. Okay. Now, as I said, I mentioned about breakout trading. Right? Now, in this case, remember, if you were watching this 82 rupees, then the breakout took place and it was retesting that area with a sideways movement. Right? There are two options that you can do. Number one is, if you were confident on dip products, you could have accumulated at this sideways movement, expecting a breakout. Right? Here, I'm not talking about stop losses. It's only accumulation. It's about accumulation, right? You could have collected at this level, and the rest is history, right? Similarly, here also the same story. At the current moment, if you are still confident that, Deep Products is a gold mine, if you are really confident, then absolutely in the sideway movement, if there's going to be a sideway movement, you can accumulate. That is one way of looking at it. That is one way, right? The next way is to see the pullback reversal. The next what do you call, the next strategy is to see the pullback reversal and initiate your buy entry at that point. What does that mean? Presently, if you look at it, we were looking at the high breakouts. I mean, breakouts from the high price or the previous highs. That based on that, after this level, right, continuously in a matter of 1, 2, 3, 4 days, right, it went up with a huge bullish, rally. With a huge bullish rally, it went up. Okay, therefore, we didn't plot any any kind of any level between this high of any level between this high of 225 to this high of 425, sorry, 347 rupees. This gap, we didn't do anything, right? We just didn't do anything. Now this is a huge gap, right? This is a huge gap, or the price increase, this rally, we can look at how far this price range is, and we can understand how this how far this rally went up in rupee terms and percentage terms, right? Look at this 57 rupees and 80 cents price move within a period of 1, 2, 3, 4. Take that also. Let's take both. You can see from here to this 347, 157 rupees and 90 or 20 cents price increase in a matter of 10 days, market days, right? And 14 calendar days, and 82.57%, right? Now remember, this is something called a pole. There are two patterns called the flag formation and a pennant formation, right? Flag, we had discussed earlier, just to refresh your mind and to explain to the others who are interested. A flag is, you have a flag. In a flag you have a pole, right? This is the pole, and you can have a channel formation like this, or you can have a triangle formation like this, which is called a pennant. Okay, so this is the formation that would take place the moment you see a huge pole like formation that we can see over here. The moment you see a flagpole formation, right, you have to, and you can figure out that there can be a flag or a pennant formation. Now the flag doesn't not necessarily need to be just like this. You can see a flag formation like this also, right, in the Sri Lankan market. Now, in order to understand that, we are using another trick. What is that trick? That trick is Fibonacci retracement lines. Fibonacci retracement lines. Now this is the strategy that we are using, is to buy at the breakout reversal. Buying at the breakout reversal. How are we doing that? We will be taking this lowest low to this highest high. Okay, we are going to take it and drag the high up to this level. Let's take this out, then it will be easy for us to see it. And let's do a little bit of artwork here. Okay, let's be precise with the prices. Low is 190.10 here. High, as we discussed, was 347, right? Let's take the background out like that. And let's take this trend line also out like that. Then it will be more clear for us. Now in this Fibonacci retracement lines, we are expecting, we are analyzing or watching what? We are watching the support areas, right? And from that support, we want to see that reversal happening, right? In the case of any, in the Sri Lankan markets, the way I have experienced, others might have experienced in a different way, but my experience is that this fall can come down right up to 190.10 also, right? This fall can come down up to this 190.10, but it cannot come down below 190.10. The moment that happens, it's a trend reversal. It's very, very bearish, and this expectation of this high trend or the uptrend will be invalidated, right? But having said that, many reversals take place between, most of the time, between 38.2% Fibonacci retracement line and 50% Fibonacci retracement lines. Worst case scenario, it comes to 61.8% Fibonacci lines, and within the region between 61.8 and 78.6 also, right? Now in this case, it has fallen only to the area or the range between 23.6% and 38.2%. It came down. When it is coming down and trying to go sideways within this range, you need to understand that there is a support base forming. It's a support that is there, right? In that support, you have a low and a high. In this support, immediately you saw a low here, which is 290 rupees and 10 cents, right? Then the next low tried to come down to 290, but failed, which is a false breakout, So now the low is 290, then the high is to 312.50. These areas, you can see that the prices didn't come down. The trick here is that the reversal takes place, the first indication of a reversal in a support is the highest low formation. The moment you see the lows are higher than the previous lows of that support range, that is a reversal, right? That's a reversal. And you can see that it took place, right? Not only one day. The highest low had been not only one day. Now this is the lowest low, right? This is the lowest low of 290. This is a highest low. 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 And if you still didn't believe, this is another highest low. This is the area you're going to initiate your position. In order to help you in that, right, you will see these are all above average volumes that took place, right? So these are all fantastic indications for you all to understand that there had been a reversal here, right? So that's the reason as to why you have to look at very, very closely how the breakouts are taking place, and you can use the Fibonacci retracement lines to understand where the support is taking place, and within that support area, how the reversal is going to happen by analyzing the higher low formation, highest low formation, right? Because the basic of uptrend, right? The first thing in an uptrend is highest low formation. Then comes the highest high formation, right? Here you can see this is the highest high at that moment. This is the lows, right? Now as far as this low is concerned, this is much lower than the lows that are there, that are here, right? So you can see that there is a reversal. So you have to understand that reversal setup for you to initiate a position, right? Retesting and reversing, right? So again, we have come back again to a certain scenario like that. In this present moment, if I'm going to do a Fibonacci, my the you know, the number one rule for me is the lowest low formation to the highest high formation within that price range that I'm thinking of analyzing by using the Fibonacci retracement lines. So this is the lowest low formation, and this is the highest high formation. I will be using a Fibonacci now itself and keep it like that for future reference, right? To see whether it's coming down to test 23.6% or 38.2% or 50% or 61.8% or 78.6%, right? In the case of dip products, my thought process is this. This is the way I look at it, right? There are so many ways, right? We will be looking at the price behavior or price action. Okay, I'm going to take this Fibonacci retracement out. For me, this is the 2nd of October, 5th of October, 6th of October, right? This is the 6th of October is something for me is like what we experience on the 11th of May and 12th of May. This is a start of a new trend for me, right? The reason why it came down is because of that COVID in Minuangud, right? That time there was a big sell-off, a huge sell-off, right? Thereafter, this rally had started. For me, this is a wave. This is a first wave, right? This is the first wave. If this is the first wave, after the reversal, this is the second wave for me. From here to here, this is the second wave. And we are on the third wave, right? And I also believe that when I see a first wave, the third wave can be a minimum of 1.5 of the price range of the first wave, minimum of 1.5 times, right? Minimum of 1.5 times. If we take this range to this, as I said, it's about 100, let's say 158. It's not precise, but let's take as a example, right? Let's take that as an example, and let's say it's 158.50. That means divided by 2 will be 79.2. Okay, 79.2 plus 158.50 is 237.70 or 237.80, right? 237.80. Now, how are we going to do that? As we know, we are using the Fibonacci extension lines, right? Fibonacci extension lines. Like, unfortunately, you know, I never thought there will be more than 100. What do you call, my subscription is for only 100, because, you know, all these days, less than 100 only we used to have. Most of my clients only, right? Now from today, we have, you know, our friends who are here are not only my clients. Because of the interest, I wanted everybody to, you know, have a listen to what we are talking about. So basically, we are using the Fibonacci extension lines, right? I'm going to let's take this away and just keep it somewhere there. We are taking the Fibonacci extension lines. Once again, I am using this lowest low, this highest high, and this lowest low, right? If the price from here, now the prices have started moving up, no? If the price from here goes up to fulfill the price range of this, that is 158.9 or 5, 158.5, then the price can reach a resistance level of 448 rupees and 29 cents, right? If the price moves beyond that, this is 161.8%. That means 161.8% of this price range, that is a little over 1.5 times, right? So to be precise, 1.5 times, which I believe is the minimum, right? I'm going to take this, change it to 1.5 and plot it there on this. It's 527.93%, rather 93 rupees, 90 rupees, let's say. 1.5 or 150% of this range is at 527.90 rupees. Now, can that happen? For that, the reason as to why the prices went up purely is because of the company performance, nothing else, right? People took a risk to pay a premium because they love that growth, right? They just you know, grabbed with open arms that growth. That is why they paid that premium. Imagine this quantity, 1.5 million. This is that, you know, the stories, I mean, there had been foreign selling. So the entire thing was absorbed, right? So even 500, the way the analysis is coming, right? The story, I mean, the expectations of based on the fundamentals of this company is an earnings per share of anything over 60 rupees. Some are saying 70 rupees. Those are all forecasting figures, right? So if that is the case, this 527 or my expectation of this 1.5 times of this price range movement is not a dream. It can be a reality. It can be a reality, right? But until then, just like you can see here, right, there will be corrections or there will be consolidations, price failures. In other words, they are all called pullbacks. The pullbacks will happen, right? The pullbacks will happen. Therefore, we need to keep an eye on those pullbacks by looking at this price range with the help of Fibonacci retracement lines. Okay. I'm not going to come up with any targets for the time being, although I said, you know, that story of I'm going to keep this and also, sorry, these two lines. I'm going to take all these lines out because we want to save this and keep to see how the prices are going to behave way forward, right? That's why I'm taking all these out. Let's clean up everything like this. I took, you know, I wanted to explain all this initially so that there are, you know, the other a few counters that we will be looking at, you will understand. We don't need to like keep on, you know, showing the breakouts, how it took place and all that. Those are kind of homework for you all. Understand, feel how the breakouts are taking place. It's very important. Forget about any indicator, moving average, stochastic, RSI, MACD, all that leave aside for the time being. Feel the breakouts, right? Once you master that, once you train your eyes of understanding how the breakouts are taking place, you will know what to do. And all you need will be initially, the Fibonacci Fibonacci tools, the two Fibonacci extension and the Fibonacci resistance tools, right? So I'm going to keep only these two lines, and for the time being, what is interesting to understand is this. Remember, from here, it just jumped, to the next candle, that forming a gap. That gap, what has happened to that gap? In this price range, right? That gap is between the 50% and 61.8% Fibonacci lines, right? And between 61.8% and 78.6% Fibonacci lines here, from here to here, right? Worst case scenario, prices can fall and retest this area. Worst case scenario, right? Then what happens is the price movement presently is in this angle. Let's draw an angle also like this, right? This low, I'm going to join this lowest low to this highest low, right? I'm sorry, this highest low. Okay, here. This is the angle that it is trading at the moment. That's the angle. But if it falls below to test this area, then this angle could, you know, be something like this. It can be even like this. but still it's an upward movement, a trajectory. Okay, and you can always connect and keep with you. This is the lowest after the COVID, which is at 57 rupees. You can connect that low to this low and just move it around and see whether how this line is also going to behave. Right? These are worst case scenarios. Okay. Now, before that, to make it a bit more clearer, we'll take this low to this low. Right? Like that. Then I would want to reverse this and keep to understand how the prices, if after the reversal, how it's going to behave, right? Let's give 127.2 and 141.24 and 200% all. Let's take all those lines as well. So basically, I'll remove these angles and just draw trend lines on trend lines like this. Right at the moment, that's the trend line. We'll see how it's supporting. Actually, whether this trend line is going to be broken and the prices, start falling further, won't matter as long as the prices are going to hold above this low of 290 rupees, right? So when I'm talking about these 290s and all that, obviously you will not believe, because people who took that risk and paid a very high premium due to the performance of that company, right? So that performance will support the price behavior, right? So for that, because of that, sometimes you may not worry, uh, thinking that it will come down below 50% over here, right? It can happen. I mean, I'm not saying that it's going to happen, but we have to watch step by step how the prices are behaving, right? Presently, you will see sometimes you might see that prices are just going sideways, or above 370 rupees. Sometimes you might see it's above 400 rupees. We don't know, right? So we have to wait and see. But presently, that's how it works. That is the price. If you take the forward, in terms of, I mean, for the products, there can be a sideways movement, just like there had been sideways movements for the other stocks, right? So we are going to save this, and I will mention here the products, because of the bearish close, need to watch the consolidation. Consolidation, uptrend is still intact. Let's see how this price is going to behave in the coming weeks. This is how you save, right? The products. Today is the 7th. Right. Okay, from here, basically, okay, sorry. Now the next easiest, the most, the basic and the simplest pullback accumulation, or if you want to buy on pullbacks, you can make use of another indicator, which is the moving averages, right? Let's look at that with Heka. Moving averages, how the moving averages are behaving with Heka. Now remember the breakouts, the same story, right? Now itself, I can see the breakouts. You all have to train. Obviously, there are maybe a lot of people who have trained their eyes about the breakouts, right? For those, I'm referring only to those who are, getting used to training your eyes to understand the breakouts, right? Remember, just it's very important. Okay. Now, in this case, I'm going to just take the EMA at the default value. EMA at the default value. Default value is 9 days moving average, which is the exponential moving average, as you all know. Right? This is an easy, very easy method of analyzing in order to, make use of this. If you call this a trade idea, a trade setup, very easy to understand, right? The moment you see, now here, there are two things are happening now. First of all, the price has to close above this moving average, right? And then what happens here is that the prices are just trending up with higher lows. You can see the prices are moving up, meaning it's uptrending with higher low formations. Okay, so it's going up. Then at this point, it's going sideways with higher volumes, right? In this situation, you see the easiest, the most basic way the 9-day moving average, right? So you buy here, but then what happens is then you will come to a situation where, you will have a challenge to understand. Okay, you buy here, then what happens if the prices fall, right? Then for that you have a stop loss, provided you are doing a trade. Here we are not doing a trade, right? This is we are going on the basis of accumulating, right? So you do that. Then at the same time, if by any chance it falls, retesting, then you can buy your, you can basically break down your, the volumes that you are thinking of collecting. You can break it down into any amount of, blocks or percentage points that you would be, planning out, and you can start accumulating when the price is, retesting it, or waiting until the retesting is over and makes a breakout of the moving average. The price again closing above the moving average. It went up here, came down, retested, and closed above. At this point, you could have initiated a buy. Then again, if you wanted to wait, right, now that the prices are still moving up, you could have made use of the moving average as a support line, right? You can see easily that the moving average is supporting at least this 9-day moving average for this rally of HECAB had acted as a support, right? Then, so basically you can make use of moving averages in order to accumulate on pullbacks, right? Always when the prices are either going sideways and prices are, going within the moving averages, you can accumulate. Then once you can see that the prices are moving into new highs, then retesting and trading within or closer to that moving average, that is another period you can accumulate on a pullback. There again, you can wait until a reversal takes place, and you can study the strength of the support in that lower base, right? And then you can start accumulating. Again, you can do the same thing over and over again whenever the prices are testing the moving average, whatever the moving average time period that you are using. So the moving average is another indicator that you can use when the prices are increasing and you struggle to understand as to how much you're going to buy, right? Because there is a lot of regret. You see, people who bought HECAB or DIP products or any stock in May, right? And if they have sold already, then what are you going to do? You are like stranded. These are the methods that you can use to accumulate shares on pullbacks, right? Whenever there is a pullback, you can accumulate your shares. Here also the same story. There is a doji based candle with a with a wider range body, right? But this is basically a doji, which means that the next few candles will be very interesting for us to understand whether the prices are going to move sideways and then break out again, right? Because if you can see, if you just go fast forward and see, there had been instances like that, right? Here also the same story, right? If you take here, the prices have rallied, then gone into a sideways movement, then only it has gone up, right? So HECAB, it's nothing surprising to see that when the prices are moving up spontaneously within 1 or 2 days, right, with a very large price range, there are corrections. So here also the same story. There can be a correction over here. Since I'm going to look at the behavior of the support area, I'm going to once again make use of this Fibonacci lines and watch how the prices are behaving. The present situation, you can see, okay, it got closed a little over 500 rupees. You can see at 506 rupees, it got closed, right? And after reaching a high of 550 rupees, you can see that it came and tried to kind of trade below 500 rupees. But at least for yesterday, there were buyers who were strong to close it above 500 rupees. We don't know whether that type of strength is going to be there in the coming days, right? If by any chance that is not going to happen, then the 61.8% Fibonacci area is an interesting level. Why? This is the previous high of 3. You see the previous high of 474.20 is also placed within that range of 78.6% and 61.8%. Worst case scenario, it can come down to this area. Now, other thing that we have to understand about HECAB and DIP products is that we are moving to historical highs. So it's very, very, the risk level is very high. The reason why people are taking that risk and paying a premium is because of the confidence they have on their performance, right? So based on that performance, people are willing to take risks. They are willing to take risks. Remember, if you take their June quarter results that came, if I remember right, might have been around, where is this? I think somewhere around here, somewhere around September, right? Somewhere around September. Here also you can see that there was a huge price difference. You know, this day, that is 31st of August, the high is 288 rupees. The next day, the 2nd of September, it was 300 rupees, right? Then it just went sideways. That was the time that they showed 23 rupees for the June quarter EPS, right? But still people didn't pay a premium, right? The next quarter came and see the amount of premium the risk takers took. From here, from this low to this high. So that is because people believe that they will do, they're confident of their performance. Therefore, we have to see how the prices are going to behave in this range between 502 rupees to 464 rupees. That would be interesting to understand whether the prices are going to respect these areas, at least to respect the previous high of 474.20, right? So that is very important to understand. Here also we will be HECAP watching the retracement. Support, we can say support 1 above 474, right? Support 2 is obviously psychologically it will be 460 or 450 area. We can say support 2 is, these are psychological prices, above 460. Let's see how the prices are. Let's see how the prices are moving. Around these support areas. What is the call on this, right? So that's HECAP. Then let's move on to Expo Lanka, which is another, happening stock at the moment. Everybody wants to grab Expo, right? Again, the same story of breakouts are there. Let's not talk about the breakouts. Again, as I said, you can make use of moving averages. I'm just giving you one example only. There are thousands and thousands of ways of using, moving averages. It's literally your freedom to, come up with various types of moving averages and analyze, right? But for the time being, this is how it is happening. You can see that there is a breakout here. I mean, this high was broken out here. Now we have tested a new high of 2540. This is a new high of 2540, right? Now, before this new high, this is the previous high. Let's take how did it fare if I am going to use Fibonacci extension lines by looking at this lowest low. Why this lowest low is? Because that is on the 6th of October, that COVID sell-off day. There were 2 days of COVID sell-off. You know, people were panicking and selling, right, on the 5th of October and the 6th of October. So there was a bullish reversal candle formation there. So I'm going to take, this is the Fibonacci extensions that I will draw here, right? This is the lowest low. That's 11 rupees to this highest high of 1960 to this lowest low, right? That is the lowest low. Okay. So if you take the same trend extension and measure that from this low, you will, that extension will end up at 25.17, right? Let's see what happened. Exactly at that 25, around that level, the price got rejected. So what is going to happen now? Again, let's look at the Fibonacci's. Let's just, you have, it's free of charge, right? And it is very effective, these Fibonacci numbers. Just draw by using this lowest low to this highest high. Just put that there and keep. Don't try to argue with anybody that this is going to go up to 30, 40, 50 at the moment, right? Now, if we are thinking that these prices are going to go up, absolutely the chances are there, right? Don't think that the prices will not go up, right? If by any chance presently, if the prices are going to come down, then little by little, the prices have to fall from here to here, to here, to here, to here, to here, to here, and downwards. Or at least before that, you will see the price, you know, failing to hold these trend lines, maybe moving averages, right? Whatever the price, as long as the price has a trend where the lows are higher than the previous lows, it's an uptrend, right? Whoever is trying to sort of, keep on, shouting and screaming and say, no, the prices are going to fall, right? Those are pullbacks. Those are not trend failures or trend reversals. They are pullbacks. So don't worry when there is going to be a pullback. Those are opportunities that you're getting, right? So let's watch for that pullback. If by any chance there is no pullback, then this level of 25.40 has to be broken out. A breakout has to take place like this, right? From here it came down, then broke out, then hammered here, right? So the same thing has to happen. Before that, let's watch whether there is going to be a pullback, right? Expolanca. Let's say watching a pullback, Expolanca. Remember, these prices can go up to, historical highs now. Even now, we are moving into historical high levels. Doesn't mean that it's not going to happen. It can happen, based on their performance, the expectations of their better performance and continuation of better performance. All that will re-rate the prices. People will take huge risks and give premiums, believing those, right? All that will happen, no doubt about it. But before all that takes place, this pullback will happen, then a reversal has to happen. and watch that reversal, then initiate. You can plan out your buys, right? Or your buy entry or whatever you call it. Watch whether this, the present high fails to hold. If so, closely watch the pullback. Right? Then let's go to Royal Ceramics. Ceramics also showed us fantastic results, unbelievable profits, right? So we are all really happy to see in Sri Lanka that the local manufacturing sector is doing very well. Okay, so the same story about all that I was talking about, the breakouts, moving averages stuff is there. You can do all that. Now, early also I mentioned about this COVID sell-off, 5th and the 6th, and I consider this as a wave, the first wave. For me, this is the first wave, right? That first wave, we can see how far it came down to after hitting that high of 136 rupees, right? So let's have the normal one. This is how it happened, right? It came down below the 50%, tried to close below the 61.8% area, didn't, which means it's a false breakout, right? I've been always telling about the false breakouts because it's very important to understand the false breakouts when the prices are moving sideways, especially in a pullback, right? So it's like this. You can nicely see how the 61.8% was respected. Again, forming higher lows. This is the lowest low, higher low, higher low, higher low, higher low, and it is history. Okay. But then the next thing I was talking about is the wave 3, right? Wave 3 going 1.5 times. Minimum. I said minimum. 1.5 times. I hope you all can see this. Look at the 1.5 times calculation, which is 164.65. We have gone and tested the resistance area of that yesterday, right? So Royal Ceramics, they came out with the results yesterday and fantastic. So people will celebrate, right? There is no doubt about that. People obviously can celebrate, right? They will celebrate. Okay, how much the celebration is going to be has to be this area, right? You don't see because we have not given what you call given any levels here. So let's do that. Even though it's even though it's 1.5 times, the wave 3 can extend to even 2%, 200%, 2 times of the first wave. That can happen, right? So this is how it would look like if that's the case, 182.80. So let's keep a watch, right? Royal Ceramics, watch Monday's price action. Then decide on your buying strategy, right? This is RCL. Now, if somebody is somebody might question whether it's all over. No, this is a pullback. I'm talking about a pullback. Those corrections are healthy. And that is how the prices in RCL and many other stocks have been behaving, right? It had been behaving like that. Now see, this is a sideways movement, right? Then it started going up and up and up, right? Here again correction, right? Then went up, pullback, then went up. So there can be a pullback, at which point the Monday, especially the Monday's candle is going to be very important, right? Monday, sometimes even to Tuesday's candle, we have to see, right? So the pullbacks will take place. So watch for the pullback. Watch for the pullback reversal, I would say, reversal. To watch for the pullback reversal, right? That is RCL. Right. Okay. Then LWL, another one which was interesting yesterday, and it went and cleared the entire board, and later on it closed at 108.10. The same story about the Fibonacci extension lines. This is the wave A, this is the wave B. A equals C is at 98.30. 1.5 times of that is 110 rupees. Just like if the same kind of price movement takes place like the RCL, and we see the prices moving up, it can go and test the area between 110 rupees, 110.90 to 123.50, this area, right? But this is a spontaneous, very strong move, a strong rally. Therefore, we have to see, because these are all flag pole formations. These are all flag poles. It can be a flag or a pennant. ACAP, Deep Products, Expo Lanka, and even Royal Ceramics are the LW. These are flag poles, and those happen, right, when the buyers are really aggressively bullish about any counter, any stock, right? Coupled with, in Sri Lanka, coupled with what? Fundamental changes, positive changes in the fundamentals of the companies, right? So that is why they are again, we'll say, it's very important to understand what is taking place in those. Watch Monday's price action. Reversals can happen. Need to watch the pullback. Okay. right? Then let's move on to another stock. After this, I will take, I will cover two stocks, and then thereafter, if you all have your favorite stocks, let's look at them. Right. This is another stock that changed the direction of the market. You know, this is Bukit Dara, right? In the case of Bukit Dara, basically it changed the direction of the market. If you want to evaluate how it changed, let's take the CAC also. From here to here, right? The value of basically, let's take these 3 days, right? If you take these 3 days, you can see the index from 5,800 points went up to test 6,000 points. At that, in the 200 point increase, right? 200 point increase, Bukit Dara from a low of 220 rupees went up to test 520 rupees, right? So Bukit Dara from 5,800 market helped the market to go up and test 6,000 points. Why that 5,800? Let's see what is the date on that. 24th of September. Let's look at the CSE all share and see why that is important, right? 20. I'm sorry. Again, what was that date? Bookie. 24th. CSE 24th. How much was it? This is the area, right? A range was 5738 to 5803, right? Then in 3 days, went up to 6,040. Within this period, Bukit Dara went up, right? Otherwise, we were struggling at that 5,800 area. So in a matter of 3 days, we enjoyed a rally and mainly helped by the price action of Bukit Dara. So now that we have gone back to that 6,000 area, right? We cannot rule out any trend reversal on Bukit Dara. We cannot rule out that. Now see, in the case of when the prices went up, right, from here, it's just only, I mean, this is, as we all know, this is a highly illiquid share, right? Highly illiquid share, 6,400. Then you have 30,000 on the next day. Then you have 21,000 on the day after. Then again, low volumes, right? So what is important for us to understand, since we are wanting to see how the price, how the market is moving from this low, right, to this high, what do you call the prices have now come to test the 38.2% Fibonacci line and the 50% Fibonacci line with a false breakout where it tested 61.8%, right? Here you can see it had been, trying to find support or take support between 341.90 and 383 rupees, right? That is where Bukit Dara is trading at the moment. With many bearish candles, still there is a higher low formation. Just because there is a higher low formation doesn't mean that it's a counter to go and collect. Why? The reason is it's very difficult to, accumulate quantities and, expect, a trading opportunity, especially when we are retail traders, right? So we got to be careful when we are deciding on the amount of shares, even within this zone between 341 and 383, if you're collecting, right? When the market is re-rating and extending beyond 6,080 or 6,100, right? You will see the price, the price action, positive price action on Bukit Dara, right? It'll once again, it will be supported only by the performance. If the company performance is also going to be better and people are expecting that there is a recovery in Bukit Dara, then there can be a premium, a re-rating taking place in the prices of Bukit Dara. But at the same, presently, there is a chance of a reversal in the price action where it can test back again this 436 rupees to 520 rupees. Any breakout there can, if you are taking this wave, because basically this is like, this is a wave which had been, acting as the initial or the first wave, which is a significant wave, right? So because of that, we can, if this wave behavior is going to be there, right? You can expect it to go and test resistance levels beyond 520. A breakout above 520 will test 582 to 658 rupees. But of course, people will react to it on the back of the strength of their profitability moving forward. If people believe that they have, they have the capacity to grow and show more growth in their profits, then we cannot rule out the testing of these areas, right? If the company's results are going to be good and the prices are getting re-rated, then we will see I would say a strong impact coming to the the in all share index as well. We can see, I mean, for that 3 days, it helped to take the ASI from 5,800 to 6,000, that is 200 points, right? So this can contribute in a big way. But the biggest disadvantage in this is we cannot get stuck in with volumes, right? So as retailers, we have to definitely remember the risk behind the volumes. Don't get stuck in volumes with Bukit Dara. Of course, if they have done well, then even at some point of time you will be able to get out of it. But make sure that you are not trying to sort of get into bigger positions in Bukit Dara. Right, then the final thing is glass. Another one which is in the news, these days, because of, the Indian companies up for sale, and at the same time, they also showed some better performance in their September quarter. So some analysts are expecting something better to happen in them. Again, you can see that there is a strong wave movement from the 6th of October right up to 14th of October. And if you take that as the first wave, wave A to wave B, then your wave C is at 11 rupees and 39 cents. There again, positive fundamental backing has to be there for this to give you, a breakout and test new highs between 10 rupees and 20 cents to 11 rupees and 39 cents. Now, interestingly, what happened was here, I mean, if you take the Fibonacci retracement tool and see how the support has taken place, you will see that it came and retested just like the other counters, tried to fall below the 61.8%, but failed. And then for a few days, it was trying to test the 50% Fibonacci line, but now once again, it has, moved beyond that and moved into a new, to the present highs. And once again, there's a pullback. In order to look at that pullback, we will be using this lowest low to this highest high and see how strong that pullback is going to be, whether the prices are going to come back and test this 38.2% and 50%. If that is not going to happen, then this wave extension, the trend reversal that took place from here onwards is in place, right? And we can expect the breakout to take place. That I would want to check glass. The main takeaway here is that glass, the support or the support line, yeah, the support lines between 38.2% and 50% needs to be respected. If the price is not or is failing to test the 50%, it can be considered as a bullish development, right? 2 days, we can see it tried to test 790 as the low, right, on the 5th and the 6th, right? Low is 790, but that doesn't mean that we can see, that the higher low formation has taken place. That's why we need to see whether this 38.2% and 50% is going to be tested If that is not happening, and if the next candles on Monday, or candles in the next week, will be very important to be watched, right? That is on glass. That's how it looks like in glass. I'll be sharing them in my chat group and most probably on FB, my group. Let's see how it is happening. And then finally, that's all I'm going to show you all. Right, Tokyo people. Let's see how many from the top, what everyone is asking. Can hear, kindly send the recordings. Is it resistant line? Okay. Expo, I covered Expo, LOLC, Cargills. Let's look at that. Any penny stock, I covered glass. What about Vaughan, Mr. Sali? Yes. Valuable Power, AEL, glass, Parquet, Valuable Power, Tokyo, Greg, Haley's, Greg, Tokyo, LMF, Haley's, Tokyo, Reg, MGT, JKH, again Tokyo, Repair. So basically Tokyo, let's go with Tokyo for the first chart, right? Tokyo. Okay. In this case, the same theory applies. This is that COVID sale. This is the COVID sale. After the COVID sale, right, it went to a high of 67.60. Okay. And then failed, pulled back. Let's see how far it came down to and what was the strength that was shown in that region, right? You can see it came down to 38.2% and 50% resistance lines and took support there. Okay, and then went and tested the 23.6% resistance line. Right now, that is the support line. Why we are saying that is a support line, or basically the support now is between 59.50 and 62.60, or you can say 62.50, because it's a psychologically convenient number. But in the case of this, retracement lines, 62.60, that is the support. 62.60 to 59.50 or 59.40. This support is what is important to understand. It has to be respected, right? So now we are waiting for that breakout to take place. Breakout means first the candle which will help that breakout, we need to look at. And then volumes must contribute, right? You can see whenever the prices went up here, volumes have increased. Here also the same story, volumes have increased, right? So when the prices were coming down, volumes, have haphazardly increased, but not continuously. So the volumes have to contribute to the rally of Tokyo. No volumes, no rally. Simple as that, right? If you don't see volumes, this rally is not going to take place. At the moment, yes, accumulation is happening, and then it's that in certain days you can see that the volumes are above average, right? That is why we have to understand that the volumes have to contribute. You can see a breakout because it retested the 6760 area. It got retested, right? And then presently it's a doji formation. Doji itself in a bullish kind of a trend is positive. You can't rule it out, but then if the volumes are not helping, then this may give you a signal of another sideway movement, right? It could be a support between 6260 and this 6760, right? So that is what we will be watching in the case of Tokyo. Tokyo, watch for the breakout. If not, no. Volumes must help the rally after the breakout. Present support can be between 23.6% fib and 38.2% fib, right? Then let's see where it can go up if the breakout with volumes take place, right? If the breakout with volumes take place, this A price range will complete at 76, that is 77 rupees, right? 77 rupees, and strong volume continuation, right, can take it up to this area of 87 rupees, or even 90 rupees, or even 98 rupees. Now, why people will be buying volumes is all to do with the confidence they will have on the performance of the company, the future of the company. Otherwise, people will not be encouraged to buy collecting bigger volumes. So we need to understand that a breakout can take the price to test 77 rupees. Strong volumes can extend to test 87 or 88 rupees, let's say 88 rupees, to 90 rupees and 50 cents. without volumes, trend will be on a consolidation. That's Tokyo. Right. Then the next one was Repair, JKH, AE, Greek, Tokyo non-voting. You know, since we are in Tokyo, let's look at the Tokyo non-voting also. Similar setup on Tokyo non-voting. Kaushan, something's happening. Please check that out. Right. Here you can see again the same story. Right. You have the wave A here. Then this B. Again, there's a doji formation. Right. In this case, it's not at the same high of 58 rupees. It was below that. Tried to, you know, it only retested 57.50. Right. So when you see a doji, it says that, you know, the direction is like on crossroads, right? Indecision is at play. Therefore, we need to watch that. Therefore, let's, I mean, if you're going to look at the trend there, just like what we looked at on Tokyo voting, right? This is how it can happen. The C wave or the third wave the minimum level will be 65.70, right? And it can even retest this 70, not the retest, can test the resistance of 75 rupees to 77 rupees. Very bullish, 84 rupees. But these areas, as I mentioned in the Tokyo voting share, has to be helped by volume behavior. No volumes, no trend, right? So that's on this thing. On Tokyo, JKH I saw. Let's look at JKH. Then we will come to valuable one. JKH is in a very, very interesting area. Why are we saying that? Right? Now, remember, I was talking about flags and pennants. Those are, those are patterns in trend extensions, right? When there are trend continuation formations, you see pennants, you see triangles, you see flags, including when it comes to a triangle, one of the famous triangles that we can see on many occasions is called the ascending triangle, right? Here there is a formation of an ascending triangle. If we see the retesting of this high, meaning 138 is tested, right? Let's draw a chart, I mean a trend line like that. 138, right? And then let's connect these higher lows, this low with this low, and extend it. This is how it looks, right? This triangle formation, or in other words, this horizontal line, the upper horizontal line, and the lower upper line, or rather ascending line, has to be respected. it has to be respected. Presently, it's on a painful consolidation. Within this, within these two lines also, you can see that the prices are, trying to, now these 2 days, it was trying to, test 137 on both occasions, right? So it has to break that, only another 1 rupee away to test the highs that we saw in this area, right? Now, it's very difficult to do a trade on John Keels if you're buying at the higher end. That is one issue you have. Of course, when you have those bearish days, sell-off days, it will be ideal for anybody to collect on those days. But I don't think it's like it's going to be a good idea trying to sort of trade a stock like JKH, because you have many other options. The only way that you can, ideal moment where you can trade JKH will be during those sell-off days, right? When there is major sell-offs taking place, remember to look at JKH, right? Especially we can see, if you take the large caps, JKH is a good counter to look at when there are major sell-offs taking place. Here the COVID, you can see what happened during the 5th and the 6th. During that COVID period, just came down. Then here also the same story, COVID, that Paliagoda scenario, there is a sell-off, right? Only during those periods you have to look at JKH. When it is moving, it's good for the it is good to analyze how that is going to contribute to the all share index, right? It is nice to see that JKH is going up, because it's then it's healthy for the movement of the index as well, right? More than trading, you have to basically look at those opportunities when you see. But okay, you have that expectation of that, this 130 is going to be broken out. That's more than that. There is nothing for you to think of as far as trading is concerned, I would say. Then let's take another counter. Okay, HEMAS, let's take. I think HEMAS is a counter that we should be looking at, right? Now, we shouldn't be really worrying about all these, these huge price swings in the case of HEMAS, and there are certain counters like that where the price swings or the price ranges are up and down. The price ranges are very, very high. That itself is not going to be an indication for anybody to trade. Presently, it's good to accumulate rather than taking positions to trade on this, right? The only good thing that you will see in this is that if there is going to be a breakout, there can be spontaneous price price movements, and it is not the case right now. There are large price ranges in this, but not consistent, right? So we got to remember that in order to accumulate, I think HEMAS is a counter to look at. not to trade right now. But of course, if there is going to be a breakout here at 78 rupees, as I mentioned that, when there is going to be a breakout, there is going to be a strong move upwards. That can happen, right? Because if you take from the 12th of May, there had been a breakout. If you take this high of the 13th, you can see it took such a long period for the breakout to take place. But the moment the breakout took place, the price, uh, you know, went up to a range of, from there onwards, went up to a range of 12 rupees and 97 cents, giving you a return of almost 20%. And if you take the date range, you can see that the range is something like 10 days. In a matter of 10 days, you got 20%. After brokerage, about 17%. So HEMAS is like that. Now, once again, it's in a consolidation, right? If you take, apart from this Fibonacci extension lines, let's see how far it came down on the retracement from this lowest low to this highest high, right? It once again, you can see that HEMAS also came down and tested 61.8%, then went up to find support at 50% here. Now it has moved to keep the 38.2% as the support, right? So that is where it is. So basically, you have a wider range of a support here, 23.6% to 50%. Some can be even 61.8%. The present support is at 70 rupees and 60 cents, we can see, right? But still, it's on a consolidation. It's on a sideways movement. That is something that we need to understand. But after the sideways, after the breakout, right, you might see the prices reaching, uh, let's see how much it was. Reaching a high of 84.60, and thereafter, because of this price behavior, there is a huge, a potential. There is a strong potential for the HEMAS to give you, I would say, above normal returns, but unfortunately there is going to be a painful sideways movement, right? Let's hope that sideways movement is not going to be there, just like what we see here, right? If that's the case, then you might be able to see that your expectations of prices testing this 84.60, let's say between 84.60 and 94 rupees can happen, but for that we have to, like, you have to give some time, and we have to just basically watch that. Because of that scenario, you want to hold it in terms of, there are other options, especially nowadays, because some counters are giving you good returns in terms of dividends, right? So at these levels, at these price levels, you have better options. That's why you need to, it can be, I would say, if the breakout takes place, then you might be able to, it's worth looking at it to trade. Not at the moment. Valuable one, sorry, I wanted to cover valuable one. Valuable one is like this. They are again the same story. one of the reasons as to why you have all these spontaneous large price range candles is purely because, for a long period, these counters were wanting to find, newer highs, right? But you can't, you know, you see, it's clearly shown that when the companies are showing strong potential growth, right, only you will see the prices are, reacting positively with a lot of confidence. And when you see, large candles like this, it shows that, people are really, the buyers are really uncertain what is going on. So the fear factor is also there. Selling is also there, right? So now in the case of Valuable, we can see that little by little, it's trying to find kind of, uh, I would say a, a situation where the price normalcy is going to happen. That is what we can see by looking at these candles. Now, how that is happening is through the volume accumulation, right? The moment we can, you see, okay, you have a volume, largest volume got traded yesterday, 4.6 million. A continuation of volume accumulation has to be there for us to see that variable one is going to get re-rated and move into higher levels, right? They have, if you take in terms of net asset value, it's it's a fantastic company, right? After this financial year, you might see it, the NAV beyond even 50 rupees. Okay, but the issue is continuation of volume. Uh, you know, I would say contribution has to be there. Consistency has to be there in terms of the price action. That is not there. You see, okay, we have expectations that it'll move to newer highs. There is no doubt about that. But then that, you know contribution in terms of volumes and price, especially the volumes, right? Meaning participation has to be there for that that kind of, expected rallies to take place. Just, I we can see that these prices are like from this low, it has gone up a decent level, right? It has gone up a decent level from here. If you take up to this level, it's a 42% return in a matter of, uh, in a matter of about 15 days. What is going to happen is, I mean, if by any chance you see the RCL or Lanka volatiles, especially those two counters, are moving into a pullback, then you might see some trend direction, a short-term trend direction in Valuable One also, right? So if by any chance there is going to be a trend direction for a pullback, then there is a kind of a gap here that is going to be a support, right? So why I tried to sort of, it's like I'm only talking about how the prices are, right? Based on the prices only, I'm telling that price behavior is in such a way that it is not, not smooth enough. Okay, let's take another view by looking at this formation at the moment. So that is how I see. Not that it cannot go up, but you need to have a consistent trend you know, it could have been, you know, you can see that the price action around this area, right, is you have with smaller kind of you know, price ranges, whereas when it comes to this area, there's a lot of volatility, but then that smoothness or the you know, continuation will always occur with these pullbacks. Sometimes it can be even you know, very spontaneous pullbacks like this. That is where the issue is. That's because the fear factor, the uncertainty is very high, relatively high compared to some of the other counters. Mm, let's hope that that kind of fear factor is little by little is going to be over from it, and then we will see a nice rally in that. Let's watch until that takes place. In the case of AEL, in the case of AEL, you can see that uh, the high of 25 rupees is a strong psychological resistance, right? If you just take a horizontal line and draw it like this and take it to a weekly chart, you will see that this 25 rupee area is something that hasn't happened continuously, right? Here you can see after this major fall, here you can see it got retest. I mean, it went above 25 rupees but failed to hold. Here also the same story, right? So we are now going back to test that area, you know. So you have to give room, the accumulation has to take place until, you know, until some, there again the contribution from the company, positive impact has to come from the company, you know. Until then there can be some you see, it, it's the rally will take time, right? You see, but at the same, you can see that there has been a nice rally from the lows of May, right? But then you see kind of a consider it goes, the rally moves into the breakouts only with accumulations, right? With collections only it's happening. So that is where we are. I mean, basically, sometimes we might say, okay, uh, presently, if it breaks out below about 25 rupees, certainly it will test the new highs, right? So until that takes place, we have to wait and see on AEL. If somebody wants to accumulate AEL for, you know, rather than looking at it as a trading counter, certainly you can accumulate uh, without any stop losses, because, you know, we are expecting the future of the overall market to be better, and the contribution from AEL in terms of the, you know, the construction sector is also very high, right? So all those kind of expectations are there. Because of that, you can accumulate. LMF. LMF had a nice setup some time ago at 115. and 100 rupees. It was consolidating between that for a while. 100 and 100 for a while in the recent past, right? This is what happened. After the breakout here, you can see, right? Okay. After the breakout here, it went and retested, or rather tested a certain price level, meaning this area that's between 126 and 130 rupees, right? Here it's 130 rupees. Then came back again to that support area of 115 to 100 rupees, right here. Then we moved back to test this 130. Now we have closed above 130, and now we are at 133.90 with a high of 134.90, right? So what will happen is, this is the sixth candle. There can be a ABC move on this. Based on that ABC move, we are testing the A equals C position at 134.40. This is 134.90, that area. So Monday's price behavior will show us whether the continuation is going to take place to take it up to test 140 rupees and beyond. At the moment we are into resistance. Therefore we if somebody is wanting to take positions on this, it is best to in times like this, right? It is better to take only very small positions, 10%, 20%, because if you have to leave room for the prices to fail and retest, or in those pullbacks to retest the previous levels. So therefore, when we are talking of retail trading, we need to be mindful of that. So that's the case of LMF. There are many counters like this which are now hitting new highs, right? When you see new high formations, then obviously all these counters, you have to be very particular in how much you are going to buy, right? So that is something you need to be mindful of. That's why this pullback strategies were discussed. Even this, even if you do not want to wait for the pullbacks, then you have to control at least the volume, right? You need to look at the volumes. There is no point just buying for the sake of buying because you have buying power or you have the capacity, right? You need to be in a situation where you have a base or quantity with an average which will give you a return, right? So that is very important. Now today I didn't see anybody talking about any sleeping giants, right? There are many sleeping giants. No one is wanting to look at them. That's why I don't want to even talk. But I will be sharing those. Give me a moment. I will be sharing those, not today. Over the next few days, I will be sharing those charts, at least with my clients, right? Those are the ones to look at. But then that's how it goes. So because of that, now all these counters that we are discussing here are the ones which are going up, right? The ticker is showing you green all the time, not red. Because of that, we want to buy them. And if you're wanting to buy, you have to really understand how much you're buying. You know, you cannot just buy quantities and make money all the time. You cannot do that. Right. Okay, ACL. ACL is also another one where there is a lot of expectations, right? So here it's very interesting. ACL, you can see here it's 64.40. Here 64.20, right? So before that, again, you can see that if you take a Fibonacci lines, you will see it came and retested only this support area of 38.20, right? This is actually on the second wave or the third wave after completing the two waves, right? So this is how it looks like. Any breakout with volumes, just like last Friday, can test and even, you know, seek of test the resistance of 76 rupees, between 71 and 76 rupees. So that you have an opportunity, but you know, this the reason why I'm saying there is an opportunity is because of the price behavior over here. You can see that there was an accumulation here, right? And then there is a bullish breakout. You know, after the accumulation, there is a breakout, but not a breakout that from the present high. So the present high breakout can take it to test, you know, these resistance levels of 71 to 76 rupees. 71 to 76 rupees. Right. Then thing is this MELS, you can't really, I mean, the subsidiaries of MELS, overall, if you take, you don't see a big contribution with from across the board, right? If you take Aitken Spence, if you take okay, distilleries will give them money, LMF will give them money, but Aitken Spence, how they will do, we don't know. That's why it's very difficult for us to you know, expect a kind of a very bullish continuation on that, you know. So that is some. Now here you can see that there is a double bottom. You have a bottom here, you have a bottom here, and you have a pretty decent, you can take this as a neckline, right? From here you can take a neckline up to this, and you can drag it like this, right? It has not got tested and broken out at the moment, but you have, you know, price expectations from this range up to this neckline, that is about 6 rupees and 40 cents, or otherwise this price range from here to here also, that's 4 rupees. So basically you have a minimum of 4 rupees to a maximum of 6 rupees, trading opportunity, or if there is a breakout, you will see it's moving to that level, a breakout from here, right? Will be like this. That is here at 38.40 to 38.40 to 40 rupees. And yeah, that's basically what we can expect from that. If there's a breakout, right? So there is a nice setup here. If you take, you have this triangle formation, nice setup, but so how well they will perform is a question that we need to watch, right? Somebody, okay, let's take Haley's. Obviously, Haley's will perform, their prices will perform well because, all these with this supernormal profits, there's its subsidiaries are showing. But then this is the question, how, I mean, if the products and Haycap is going to show a sideways movement, then even Haley's will have the same thing, so we have to watch how the prices are behaving on Haycap and the products to understand what is going on here. No one spoke about Singer Sri Lanka, which is in the same group. Let's look at that here. I think there can be some, positive price action in the case of Singer, not because even if Haycap and the products is going to retrace, Singer might show some promise, some growth in that. So better to watch. I think better to watch Singer Sri Lanka. There again, the only issue is that it's a counter where you will not see. I mean, it's an illiquid counter, so you got to be careful of how much you're buying. Any breakout, okay. Present high is this 49 rupees, right? So we tried to test above that, but it didn't happen. That is the present high. $49. Right. That's also an interesting setup in the case of Singer Sri Lanka. So better watch it. If there is going to be a breakout, then we can look at it. That is Singer Sri Lanka. Finally, let's look at Regnis, and it's 11 o'clock, so we'll call it a day. With Singer Sri Lanka, I think Regnis also will get re-rated. The same story, because of this sell-off between the 5th and the 6th, over the COVID situation. We were fortunate to see a third wave, meaning, in the price action. So that third wave can take it up to test 110 to 126. I think Singer Sri Lanka and Regnis. Watch out. During next week. Right, so basically watch for the price between 103 rupees to 100 rupees, right? Keep an eye between 100 and 103. Why I'm saying is that if there's going to be a pullback, meaning, within intraday, if you see a pullback between 100 and 103, I think worth collecting. Same thing goes to the, what do you call, Singer Sri Lanka. The reason is, if by any chance Dip Products, Haycup, those two, Royal Ceramics, of course, might, because yesterday's results, it'll be a different scenario. But the Dip Products and Haycup, if we see a pullback in those two, then, during at least the morning hours, we will see pullbacks in many others, and you will have opportunities. So I think that is something that you need to remember next week, next Monday, right? Based on all these price action, that is what we can see happening. In the even in the case of the ASI, the same story. There can be a pullback in many counters, right? And that will be a good thing for the market to go beyond 6,200. There needs to be, I mean, there, you can't rule out that, right? We cannot definitely tell that, but you can't rule out that, right? So at the same time, those counters where there had been rallies and now have come down, especially the penny stocks, some of the penny stocks, right? They had rallies, then come down. Watch for those trend reversals, like what I showed on glass. Those also can contribute when the next reversal takes place. Apart from that, some of the other major counters which are right now is going is moving within those support areas, right? But the ones which really went up during the last week, they may go in for some corrections that can happen. So I think for the time for today, it's past 11. So we call it a day today. Right then, wish you all the very best. Have a nice Sunday. And next week, all the very best. Be careful when you are trading, right? Watch out and then trade. Thank you very much.